Hello and welcome to a very special interview with the former Deputy Chairman of the Planning Commission, Montek Singh Ahluwalia. Over the next 45 minutes, I shall talk to Mr. Ahluwalia about the state of the economy, about demonetisation and GST, about the government's plans to recapitalize banks and to boost employment and growth, and of course, about Friday's upgrade by Moody's. Mr. Ahluwalia, let's start with demonetisation, which earlier this month marked its first anniversary on the 8th. In an essay on his blog put up the night before, the finance minister said that this was a watershed moment in the history of the Indian economy, and then he added that this had ended India's traditional chalta hai attitude to corruption. How do you respond to that boast?
Well, I mean, the finance minister is obviously keen to present the most positive picture he can think of. I wouldn't have called it quite that dramatic a development.
Not a watershed?
I don't think so. I mean, no, look, it's probably been the most discussed initiative of the government, of any government actually, for a very long time, primarily because it was, in some sense, a very bold move, because after all, you're taking out 86% of the currency, and that's not a marginal change. But I go along with the general assessment that it's been quite disruptive, probably more disruptive than the government itself imagined. It's had a negative impact, particularly on the informal sector, which was most cash dependent. The negative effect probably is now over. So whatever the costs, they're behind us. Whether it affected corruption or not, I have my doubts, because I don't think that if you just take away a lot of money and hand back new money, that affects corruption. It's very important to affect corruption, but you need to bring about some systemic changes that will do that.
So you're saying two very important things. First of all, you don't believe this is a watershed moment, and secondly, you don't believe it's changed the traditional chalta hai attitude of the Indian people to corruption. Neither of those claims do you accept?
Well, I don't know what he means by the chalta hai attitude, and I'm not judging attitude of people at large.
I think what he means is that the Indian people tended to accept corruption as a fait accompli, something that was given. You don't believe that's altered?
By the way, if it has focused people's attention on the importance of corruption, I mean, that's certainly a good thing. Whether it has altered basic attitudes to corruption, I've not seen any evidence of that. I mean, I would welcome anything that does.
But there's no evidence that you've seen?
Yes, I don't think there's any
Let me put to you the three big major gains the government claims demonetisation has delivered, and I'll put them one by one. To begin with, the finance minister says that the unaccounted money in the economy has now been placed in banks, and once the government has identified what proportion is black, it will tax it, perhaps penalize it, and then there will be a huge gain for the exchequer. And separately, Surjit Bhalla, now a member of the Prime Minister's Economic Advisory Council, says that the gain in the first year could be as large as 2.5 lakh crore, and thereafter there could be a gain of 1.5 lakh crore annually in perpetuity. Do you accept that, or do you think this is A, unverified, and B, possibly exaggerated?
Well, I've not gone into Surjit's numbers in any great detail. Let me say that it's very clear that virtually all the money that was lying around and was demonetized has actually been brought into the banks again. That claim is certainly correct. Now, the argument, it used to be the argument that if it was black, it just wouldn't come back. Okay? Clearly, it has come back. Probably you can call that a form of laundering. What the government is now saying is that we will trace the deposits made and then work out which bits were black, etc.
Do you think that's
Good
easy
luck.
or possible to do?
What I've seen of the numbers, I mean, anything is possible if you devote an entire army to it. But the truth of the matter is, the numbers of deposits that they would have to check are huge, given the staff that we have.
So it's a humongous task.
Yes. The other problem is that most of the people who've deposited money, most of them will have good explanations, to account for it.
So it will be contested in court as well?
Oh, almost certainly. And let me say that, if I have no doubt, by the way, that there was quite a lot of cash that represented income, I mean,
untaxed income.
Accumulation from untaxed income. I have no doubt about that.
But detecting
but
it
the
is
fact
the key.
is, it's got laundered through multiple sources. Each of these chaps could easily claim that this is agricultural income.
Let me put something to you said by a man who possibly in a sense is your successor. He is now Vice Chairman of Niti Aayog, Rajiv Kumar. 2 weeks ago, he said to me, big data analytics and new modern technology would make detecting what element of this money is black relatively easy and relatively speedy. Does that sort of technology, does that sort of big data analytics actually exist, or is he simply putting up a brave face?
Well, to be honest, I don't know what technology exists to detect these things, and I'm sure that you can use better technology. But the bottom line in all this is that if somebody claims that he deposited a lot of money, which was an accumulated savings from agricultural income, which is free of tax, it's not going to be very easy to establish that this wasn't, unless you put the burden of proof on the individual.
Okay.
Now, if you do that, there'll be a very large number of people who will claim to be harassed, and probably for every genuine sort of person in possession of black money, you'll be pursuing a large number of people.
So not only is this a difficult task, not only will it end up being contested in court, not only will it take a long time, but it will also add to the harassment, often harassment of innocent people.
That's the danger I worry about. I mean, let me say that, if somebody, there's nothing wrong in my view with the tax people pursuing individuals when there's a credible case to be made that they've obviously hidden money. I mean, you can't run a tax system unless you do that. But if you adopt a process in which large numbers of people become subject to this kind of inquiry, there's an obvious danger of harassment.
Let me put you the second major gain the government claims has followed. They say after demonetization, the cash to GDP ratio has fallen from 11.3% to 9.7%. Separately, the finance minister in this essay on his blog has said that the reduction of currency in circulation is of the order of 3.89 lakh crore. And the Business Standard, in one of their leaders, said that year on year, digital transactions have increased by 41%. Now, do you see that as a substantial gain or just a gain no more?
Well, look, on the question of the cash transactions, there was, my understanding is there was a huge, there was a big decline, and as the cash has come back into the banks, there will be a process of remonetization. So some of the cash will be pulled out, and we need to give a little bit more time to work out how much has the cash to GDP ratio actually gone down.
There, can I just interrupt and give you the facts? I believe the value of digital transactions, I'm talking about value, not volume, in November, when demonetization happened, was 94 lakh crore. It went up to 149 in March, and it's come down as of the 29th of October to 97, 98. So from 94 to 98, that's exactly the change.
That I've seen those numbers, and let me put it this way. I think increase in digital transactions is a good thing. There was an underlying trend, and government policy for several years has been to establish an infrastructure that would make more of this possible. So some of this would have happened anyway. But I think what you're really saying is that during the period when there was a monetary shock, a cash shock, the digital transactions shot up, as you would expect.
And then declined.
As soon as the remonetization happened, remember, depositing money in the banks was not the same thing as remonetization, because when you went to withdraw the money, there wasn't enough money.
Absolutely, but what about
so you needed to allow some time.
But what about the change in cash to GDP? That ratio has gone down from 11.3 to 9.7. Is that significant?
No, but that assumes that all the cash that people wanted has now been taken out of the banks and held by them. So some of this, for example, if this is cyclical and you have a lot of businesses that have traditionally been cash dependent, the need for cash might increase a little later.
So the 9.7 could creep up closer to 10, even 11.
Could go up.
The third,
by the way, I think there's one other point we should make. The assumption that good economies have a very low cash to GDP ratio is not borne out by the statistics. I mean, there are some incredibly good economies that have a high cash to
Japan
GDP.
at 19.4.
So I think what's happening is the debate is focusing on very precise things, and you can pull out whatever numbers you like. to make it look
you're
as
making
if
an
you make a
important
good
point,
argument.
which I'll spell out for the audience. You're saying the mere fact that the cash to GDP ratio has gone down doesn't necessarily mean the economy has become cleaner, corruption or black money have stopped, because a country like Japan has a 19.4% cash to GDP ratio, is one of the cleanest in the world. Nigeria, on the other hand, has a cash to GDP ratio 1.55, is probably one of the most corrupt in the world. So the government is using this set of statistics to draw a conclusion that doesn't necessarily stand up.
Well, I think that's a correct assessment, that if you're going to use any comparison, focus on it and see what the cross-country position is. And the cross-country position does not suggest that merely because the cash to GDP ratio has gone down, that there's a huge improvement in other dimensions.
The third major gain the government claims has flowed out of demonetization is that the number of individuals now paying tax has shot up. They claim this year, and this is Mr. Jaitley who said it, the figure has gone up, it's increased by 56 lakh. He pointed out that last year it had only increased by 22 lakh, which means that it's gone up by an additional 150%. Separately, the Indian Express claims, and I assume their figure is correct, that if you add to this people who pay tax but didn't file returns, as well as people who filed returns and didn't pay tax, then the increase is not 56 lakh, but 1.32 crore. In your eyes, is that A, attributable to demonetization, and B, is it a big gain?
Well, I wouldn't know whether it's attributable to demonetization. Again, the numbers filing income tax returns was expected to rise anyway. You make a comparison between the last year, I've seen other comparisons about previous years. The key thing is that the numbers that are now added who are filing returns, are they filing large incomes or small incomes?
It seems pretty small incomes.
Yeah, if it's a good thing, by the way, for people to file returns. I mean, I would call that, in any ticking exercise, the fact that more Indians are filing returns is a good thing. But to expect that this will lead to a huge increase in revenue may be a little over-optimistic.
It may not lead to a huge increase in revenue in the first year, but as the economy improves and as growth picks up, these people who've now declared themselves as income tax payers will be paying more and more, and so in future years there could be a sizable increase.
My feeling is that that is going to depend on the signaling system in the future, and what sort of incentive structure is put in place, and how much people then want to comply.
So there are question marks
there.
That
is not just connected with demonetization. I mean, there's a whole slew of things connected with tax reform, which have been on the agenda, on which progress is being made. And that's what we should focus on.
And you can't credit demonetization for those results.
I mean, look, India is going to be a greater economy 5 years down the road, but to attribute all that to demonetization would be a big mistake.
Now, there are two other objectives the Prime Minister outlined when he announced demonetization on the 8th of November last year, which, to be honest, the government hardly talks about today. And they were tackling counterfeit currency and tackling terrorist funding. And in the essay the Finance Minister put up on his blog, all he said was that stone pelting in Kashmir and Naxalite extremism had reduced, and his words were reduced. And secondly, he said that the detection of counterfeit currency had almost doubled. And again, almost doubled is what he said. And my question is, does that sort of language suggest significant gain? Or is it in fact clever use of language to cover up for the fact not much has happened?
Well, I wouldn't want to pronounce on that, in the sense that my feeling, by the way, is that I don't believe that demonetization would have had any significant effect on counterfeit currency, because people who are counterfeiting currency will counterfeit the new currency. So it may be that for a short period you'll have an impact, but the fundamental problem will recur. So I don't think that's terribly important. And I guess the terrorist financing issue was also connected with counterfeit currency, in the belief that they are financed by counterfeit currency. So there may have been a shock, but counterfeit notes, it's already evident that
both
they're there.
And suffer but pick up and carry on thereafter.
That's what I think, yeah.
Now, you mentioned right at the very beginning the impact of demonetization on the formal economy, and we actually know that quite well. Growth has come down, jobs have been lost, demand has fallen. But it's the impact on the unorganized or unofficial sector we know less about, and yet it represents 45% of GDP, up to 80% of employment. You talked briefly about it at the beginning. Tell me, from your assessment, how badly damaged is it? And secondly, how little do we know of that damage?
Well, the short answer is that we don't really know how badly damaged, but we do know that it must have been much more badly damaged than the formal sector. I mean, for two very important reasons. One is that the informal sector was cash dependent. So if you give a big jolt to cash, their activity would be hit. You know, in the very short run, like if it's something that was sorted out in a week, the problem would have been quickly taken care of, because within the informal sector there are credit arrangements. But you know, it took more than 6 months for it to get anywhere close to normal. So a 6-month disruption of the informal sector would have been a very serious disruption. Now, I can't say in terms of percentage, but you know, a lot of people talk about 20%, 25% lower economic activity. Now, if that is so, that's quite substantial.
And this is something we still have to find out the full facts about.
Yes.
This is a horror story that we still can't tell how horrible it could be.
It's a good use of the word horror, but I mean, the statistical people have clarified that all they've captured is what the data on the formal sector says.
And we've extrapolated.
And yes, and they've assumed.
But that extrapolation may not hold if the informal sector was disproportionately adversely hit.
Clearly, if the formal sector is hit, the informal sector by extrapolation is also hit. But if the informal sector is hit more, then we are understating the extent of loss.
Now, in the book he published this summer, the former governor of the RBI, Raghuram Rajan, has made it clear that he had advised the government when he was governor against demonetization. In fact, either in the book or in one of his interviews, he said he'd actually given a formal note where he pointed out that the short-term costs would always outweigh and considerably outweigh any long-term gains. Yet the government disregarded that advice, and it's their prerogative to disregard advice, and went ahead. Would you say to reject the advice of a man as eminent as Raghuram Rajan was a silly mistake?
Well, look, I think governments, the eminence of the person giving advice should not be a guarantee that the advice is taken. But personally, I think the best thing would be to publish that note. I mean, if the note was given, this matter has gone before the standing committee in Parliament to weigh exactly what the governor said and to look back on was he right. I mean, the best thing would be to put the note in the public domain and let everybody judge for themselves.
So that we know how good the advice was and what sort of argument or basis it was.
Yeah. I mean, there's no reason not to, in the sense there's no secrecy issue involved. He said he gave a note, the government rejected or disregarded it. Subsequently, the Reserve Bank board is supposed to have advised, go ahead and do it. I mean, for example, I don't know whether the Reserve Bank board was actually briefed on the note which the governor gave to the government.
Would that not have been part of the records of the Reserve Bank as well?
I have no idea, but I would assume that it should be.
Which brings me to a second point that's made about the Reserve Bank, this time under its new governor, Urjit Patel. Many people are critical of the Reserve Bank's handling of demonetization, starting with the fact that at the government's suggestion, within 24 hours, they recommended demonetization. Then they changed rules and regulations multiple times. And finally, for at least 9 months, they withheld detail of the amount of money coming in. And people say all of this collectively has damaged the credibility and reputation of the RBI. Would you agree with that comment?
Well, you know, I think it's extremely important to maintain the credibility of the RBI. So I don't want to add to criticism. As you say, if the RBI did it under the direction of the government, they probably didn't have any alternative.
You mean they were coerced?
Well, I mean, if you're doing something, that's what you said, that at the direction of the government.
At the suggestion. At the suggestion of the government. But that may be a direction too.
In my view, the best way to encourage a informed public debate on this is that the note that was put out by the governor,
Raghuram
the previous
note,
governor, should be made public. And I think personally, as an individual, that the board paper on the basis of which the RBI board made the recommendation should also be made public. I mean, that's the only way of really working out ex post.
But do you think the RBI acquitted itself credibly, or has its reputation, perhaps its independence, come into question?
No, that's too strong. That's too strong a phrase. I mean, look. In the end, the RBI is not a separate sovereign body. So, I mean, if the government, in all its wisdom, has decided that this is a major national objective, I don't think that the RBI would be expected not to do it.
So the governor and his board could not have turned around and said, when the government suggested demonetization, no, we're not going to recommend it.
I would say they couldn't. I mean, they could not do that.
So the criticism that's been made of the RBI, you're saying is somewhat exaggerated or maybe even unfounded.
I'm not sure what criticism is being
Basically
made.
that they buckled under, that they should have rejected it. Secondly, they should have prepared better for it. Thirdly, they should have been more forthcoming
the last
with details.
Point is very crucial. I don't know what
You're talking about prepared better.
Preparedness. See, my impression from the public statement that Raghuram Rajan made is that if it is to be done, you better prepare for it, and I assume that meant get all the new currency ready. I mean, it was very clear.
And that didn't happen under Urjit Patel.
Well, I wouldn't call it Urjit Patel. It wouldn't have happened under anybody because you need more time to get that done.
What about the fact
I think there's another factor here, and that is that the ATMs were disabled for a while because, you know, you took away X number of 1,000 rupee notes.
The size of the notes was the problem.
You replaced them with 2,000 rupee notes. It took a long time. But the 2,000 rupee notes were a different size. So the whatever the dispenser.
Again, you're saying this should have been foreseen.
Ideally, it should have been foreseen, yes.
What about the fact that the RBI deliberately withheld details of the amount of money that's come in? And even now, the figure that's been given, which suggests that practically 99% has come back, is still considered a preliminary figure because they haven't taken on board what has been deposited with cooperative banks, the money that's in Bhutan and Nepal. And possibly the Supreme Court may permit some other people to put money in. That case is still being heard.
But you know, my view is that once the demonetization is done, how soon you get this information, it's important for breaking news and television or whatever. But if the RBI is not very sure, if the RBI wants to do more careful counting, I don't think that makes sense.
So again, you don't criticize them on that count as others do.
No, obviously it would have been nicer if they did it faster, but I don't think this makes a huge difference because it makes a difference only in judging whether they were adequately prepared.
Okay.
But that's a second order thing. Once it's done, yes, you know, whether you decide that 6 months later or 1 year later, we're hopefully not going to have another one.
So your real criticism of the RBI is to do with the fact that it wasn't properly prepared, although you're not blaming Urjit Patel in particular. You don't think the RBI had the capacity, could even in a democracy have morally stood up against the government if the government wants to do it? No, so you don't criticize them for that?
I'm absolutely clear about this, that if the government wanted to demonetize, I don't think that the RBI, it's not my understanding that the RBI could actually hold that up. And frankly, under the rules as I remember them, the RBI is obliged, the governor of the RBI is obliged to follow a direction of the government.
Okay. Let's then at this point move beyond demonetization to GST, which is another subject which is very much in the news at the moment. Now, there have been concerns about at least 4 elements or aspects of GST: the number of rates, the way items fit into those rates, the fact that small businesses in particular have a very cumbersome procedure to fulfill, and then the functioning or efficiency of the GST network. And admittedly, in the last 4.5 months, the government has many alterations. It's made many changes and amendments to cater for these concerns. Today, 4.5 months after its rollout, how do you view GST?
That's a tough one. I mean, look, I've always been in favor, as indeed practically all economists have been, in making the switch to the GST. But I said when it happened that the way it was being done, it would not be an ideal GST. We must also be realistic that you never get the ideal, so you always get a little bit of progress and then there are glitches. Now, having said that, number one, the number of rates. I mean, they're just far too many. A kind of puristic approach, which of course never exists anywhere, is that a few exemptions, one rate. I would say not an unreasonable approach would be a few exceptions, I mean 0, and then maybe 2 rates, and perhaps sort of a cess, which is not a rebatable thing, which is not something you take credit for a few sin items. That would have been a very good system. Instead, we've got 5 rates or 6 rates. I mean, that's
and a 0 and a cess.
And the second, I mean, if you're going to do that, the idea that the same type of commodity with marginal variations attracts different rates is simply absurd.
Although that they are correcting, because they've corrected it with regard to restaurants. They haven't corrected it with regard to hotels, but they have corrected it with regard to one.
Well, but I don't know, for example, burfis with cashew versus burfis without cashew, different rates for shoes if they're above 500 rather than less than 5. I mean, that's just ludicrous, frankly.
Can I put you the argument that Mr. Jaitley might make in his defense? It's one that he's made many times on television. He says, for instance, the reason why you couldn't have a single rate or even two rates is because Hawaii chappals can't be taxed as the same rate at a Mercedes car. And secondly, he says food and other items that the poor require either have to be zero rated or kept at a minimal 5%. That's why you have this multiplicity and spread of rates.
I appreciate the progressivity argument always comes in. But let me say that, you know, if you have a zero and two rates in the middle and a sin rate at the top, you can fit the Mercedes and the chappals and the food into this spectrum. At the margin, let's look at it this way, at the margin, by moving some commodities from a higher rate to a lower rate, you increase or reduce the overall degree of progressivity. You don't have to ensure that every commodity is differentiated from every other depending on the income level of the person who's most likely to consume it. This is basically wrong. Now, let me say, finance ministry officials, and I assume that these are things that it's the officials that advise on, they agree that there are too many rates. This whole thing became difficult, as I understand it, because the GST Council, which includes lots of state finance ministers, wouldn't agree.
And one of the reasons they wouldn't agree, and again this is one that Mr. Jaitley has expressed perhaps on their behalf, is that otherwise you would have ended up with inflation. Goods would have become either more expensive and therefore more costly, or cheaper, which would have meant loss of revenue. And he wanted to ensure that the inflationary impact was minimal, which is why you needed a spread of rates so that things could be fitted in roughly where they were.
I don't buy that at all, for the following reason. You know, inflation is not the instant change in price at a given point. It's the rate of inflation over time. So by balancing rates, some becoming more expensive, some becoming less expensive, if you like, the consumer basket would not be affected one way or the other. So that's not a problem. And over time, there's no reason why inflation would be higher once you fix the appropriate rate structure.
Okay. Rahul Gandhi earlier this month has actually said we need a single rate GST and that rate should be 8%. The BJP have ridiculed him for that suggestion on the grounds that 8% would mean that you'd be selling Mercedes cars at 8% and you'd also be costing food for the poor at 18%, not 8, forgive me, that's my mistake. Do you think a single GST of 18% is practicable?
I don't know exactly what Mr. Gandhi said, but you know, I'm quite sure that in the Congress, the view always was that there should be some exempted rates. So nobody ever said that there should be no zero rated thing. Secondly, it was always the assumption that sin taxes, in other words, items that are really consumed by the rich, they would have an extra duty on them which would not be rebated. You know,
so you're saying
so I'm sure that
with exemptions and with a sin tax, a single 18% rate could be practicable?
Actually, if you ask me from the numbers that I've seen, if you did some zeros and a sin tax, 15% single would be practicable. You know, I think Arvind Subramaniam had calculated what he called the revenue neutral rate. That is, if you could do a single rate. And I think that something like 15%. You know, the Congress had earlier on, Mr. Chidambaram had made the point that why don't we build in 18% as a ceiling in the constitutional amendment itself. Now, when you look back on it, what that would have done is it would have prevented the temptation to push some rates down in compensating for others that are pushed up. But I think we would not have had a 28% rate, basically.
Now, talking together about demonetization and GST, and we've covered both of those, Rahul Gandhi famously said that these two together were a commando-style double attack on the economy. Leave aside his colorful language, but do you think the two together, the way they've happened, have adversely affected the economy? Because that's something the government contests. At best, it says this is temporary and reversible.
No, there's no question that, you know, each of these, demonetization, as I said earlier, definitely had short-term negative effects, and those negative effects were more than what the government anticipated. GST, we knew during the transition would have some disruptive effects, but the long term, I think, is definitely favorable. Now, when you say together, they were not actually done together, they were done in quick sequence. So during that period, clearly there was a negative effect. How else to have done it? I don't know, for example, whether I would have recommended delaying GST indefinitely, but if they had delayed it maybe by another 2 months.
But they could have delayed it up to September.
Up to September 1, they could have been better prepared. You know, some of the problems that we've seen
was lack of preparation.
Change, yeah. I always give credit to a tax authority that admits that it made a mistake, because, you know, we've had many examples of tax authorities.
The government hasn't admitted the mistake, but it's corrected the mistake.
It's corrected the mistake. But it does mean, the number of corrections, it does mean that if there had been a little bit more thought, then perhaps some of these would not have been a problem.
So something you're saying by implication is that by insisting on unrolling GST in July rather than September, they were less prepared than they should have been, and some of the advanced thinking that should have happened didn't happen.
I think that's certainly true, and it's not just the rate structure. I think it's some of these other things about, you know, matching invoices, which has been a humongous problem, particularly for the smaller people.
And yet
that was unnecessary.
And yet the interesting thing is, today, the day we're doing the interview, Friday, Moody's has actually upgraded India, and in doing so, two of the things it cited as positive developments was demonetization and GST. So in the eyes of Moody, and that upgrade has been something that the government is particularly proud of, these are not minus factors, these are positive factors that have encouraged them to do the upgrade.
I've not seen the Moody. I'm aware that they've done a one-notch upgrade, which, by the way, is to be welcomed, and I think it's overdue. The truth of the matter is the Indian economy for the last several years has been second to China in terms of its growth rate and pretty stable. So frankly, that upgrade was overdue, necessary. I'm glad it happened.
But what about the fact that they cited specifically demonetization and GST?
I haven't read exactly what they said, but if they cited GST, I think that's certainly a relevant factor, in the sense most people expect that there will be a transitional cost. Obviously, managing the transitional cost is something we should be doing. But, you know, after the transitional cost, benefits flow in. So Moody's would be right in saying that now that the GST is done, the constitutional amendment is done, problems are being fixed, perhaps 3 to 4 months later, you'll have a much better system. And I think that's fair.
Let's then at this point, and with this background, talk about the state of the economy today. Now, since March 2016, GDP growth has fallen from 9.1 to 5.7%. In a similar period of time, manufacturing has declined from 10.8 to 7.9, construction from 5 to 1.7, whilst the value of stalled projects has gone the other way around. It's increased from 10.7 lakh crore to 13.2. And you know better than me that gross fixed capital formation is languishing at a fairly poor 30%, and bank credit growth is barely above 5%. Taken all together, what does this tell you about the state of the economy?
Well, I mean, these are, by the way, 30% shouldn't be called poor. It's just poorer than what it was, and it's poorer maybe than what we need if we want to get to 8%. Very few countries have 30% as gross fixed capital formation, or whatever the...
But it was pretty close to 38 a couple of years ago.
So what has happened is there's a deterioration.
That's right.
And while this 30% is perfectly okay, if the objective is to grow at 6.5%, it's certainly not okay if the objective is to grow at 8%.
So what does all of this suggest about the state of the economy?
I think it's quite clear that we are going through more than just a short term, in other words, a 1 or 2 year weakening of the growth forces in the economy. Okay? Add to that the problems that the banks are facing. I mean, that's an important one. And really, if we want to get back to high growth, and remember, Moody's and company are not looking at growth rates, they're looking at stability. So when they upgrade, what they mean is they think the macroeconomics is stable. Now you can be very stable with a 6% growth rate and you will gain some upgrades, and you will not actually get the growth rate, the target growth rate, the growth of employment you want. And that's really the weakest part of the system. Growth is not where it should be. It's below the average that has been for the last 15 years. we shouldn't be too worried about the 5.7 of the last quarter. I'm quite sure that's going to come up, because that is a temporary disruption. But come up to what? I mean, the NCAER, which I think 2 days ago brought out their forecast, you can see what's happening. RBI projected a couple of months ago 6.7% growth for the current year. That's significantly lower than what has been talked about. NCAER, looking at more recent data, have projected growth at 6.2%. Now, you know, if you get 6.2 in the fourth year of the government, there's only 1 year left to make up a 5-year average. Doesn't put you in a position where the government can confidently say that we will be at 8% in the 5th year of the government. And yet, you know, when the government came in, the target, I mean, Mr. Jaitley himself, we are aiming at 8 to 10%.
They're going to miss that target sizably.
Absolutely.
One of the key concerns is, in fact, jobs. Clearly, people say India is not creating the number of jobs it needs to create, and now, post-demonetisation and post-GST, jobs are actually being lost. The Centre for Monitoring the Indian Economy has estimated that between January and March, 1.5 million jobs were lost because of demonetisation, and they've now recently added that, in fact, a further 400,000 could have been lost by August. Separately, newspaper reports about critical industries like leather, textiles, hosiery suggest that perhaps tens of thousands, maybe even 100,000 jobs have been lost because of GST. How worried are you about the employment and job situation?
No, I think that's a good reason for being very worried on that score. You know, the GST, as I said, the disruptive effect of the GST has been most felt by the smaller enterprises. Now, you know, some of this could be said to be a situation where the smaller enterprises have been engaging in tax arbitrage, not paying their taxes, so they're not really that keen to adopt the new system. But many actually want to adopt the new system, but it's been made very difficult.
And Mr. Modi has assured them that there will be no investigation or revenge for the past.
Which is a very good step, by the way. I mean, that's absolutely essential for the enterprises that come into the tax net, not to have their past record.
But come back to jobs and employment. How worried are you about that?
Wait, before you come to that, I think on the GST, the negative, potentially negative impact of the GST on small-scale enterprises and exports, the Guwahati session of the GST Council made a very important change. That is, the matching of invoices, which was a huge problem, has been sort of postponed up to the end of March. If they start matching it from April 1, we'll have another mess. So I don't think this.
So that should be just dropped altogether.
I think it should be dropped altogether. I mean, this is a bureaucratic nightmare. But I don't think people realize what is happening is that if I'm a producer and I have bought inputs, and the invoice that I've got for my input says that tax has been paid on it, and then I have to pay a certain amount of tax, I claim credit for the tax that has been paid and pay the difference. But the matching invoice system holds that I can only do that if the other fellow has uploaded his invoice and shown that he has paid tax.
Which he may or may not do.
No, it's not my problem. And what is happening is that almost half your exports come from the small guy. You know, these chaps, if you're denying them the tax return, the refund of tax which is their right, you are creating a huge working capital squeeze on them.
And
which is a mess.
Absolutely. And does this in fact connect with the fact that jobs are now being lost? Because some of the people whose jobs are disappearing are exporters. Industries like textiles have lost jobs. The diamond industry has lost jobs. Hosiery, knitwear, leather, they've all lost jobs.
That, you know, if you're an exporter, you need to be putting in export bids in advance. You need to be making offers to supply stuff. And when you're making these offers, if you don't know what's going to be the tax treatment on inputs, you're obviously going to be very hesitant. And let me say that successful exporters will be quite happy to wait a bit rather than expand.
So that's
what causes a lot.
All of this is adding to the problem that the employment sector is under. This is another reason why jobs are not being created or jobs are being lost.
Absolutely, and these are precisely the sectors that are labor intensive: garments, leather, shoes, etc. And you know, this is the sector which is already suffering from rigidity of labor laws.
One last question on this. It's often said that we need to create something like 12 million jobs a year for India's demographic dividend to actually have jobs and to function as a dividend rather than as a problem. By some estimates, we may not be creating more than 5 or 6 million, which is 50% of what we need to create. How worried are you by the
this aggregate number is extremely misleading in the sense that I don't think the problem in India is that we're not creating enough jobs. We're not creating enough quality jobs. We always create second-rate, third-rate jobs which don't pay very much. The people of India are not interested anymore in the kind of jobs that are daily wage, casual labor, insecure, etc.
They want secure jobs.
They want more secure jobs. Now, hopefully they don't want permanent employment, but they want secure jobs more or less in the formal sector. I mean, today, 2/3 of the jobs created in the formal sector in the last 4 or 5 years have been contractual jobs and not sort of properly protected.
So we need to move the economy to a position where secure jobs are being created
and
rather than the casual daily wage labor
and
jobs.
Those jobs, the numbers are very small. 12 million is a huge number.
But even the casual daily wage labor jobs did suffer, A, under demonetisation, and B, possibly under GST as well. So
well, less, probably less under GST.
But more, okay. But there's a sort of double whammy. A, we're not creating the sort of jobs we need to create, and B, the sort of jobs that are available, which may not be the right sort, which may not be the desired sort, are also being affected by demonetisation at least. That has to pick up.
See, demonetisation is now over. Okay. I mean, I would, people can quarrel about that, but my suspicion is that the disruptive effect of demonetisation
is over.
Now over. I mean, maybe
at the moment we're going through the disruptive effect of GST.
And GST, unlike demonetisation, I mean, everybody thinks that GST is a good thing. And secondly, we've got to make it work. I mean, it's there.
And when it does, this problem will be taken care of.
And what I'm saying, though, is that at the moment, the Guwahati meeting identified a problem for which they get full marks, and they just postponed it to the end of March. That is totally wrong.
And on that critical point, which is this need to match invoices, which has hit exporters particularly hard, they need to actually drop that requirement altogether.
Absolutely.
Rather than postpone it.
Look, the modern technology says that, look, if I'm telling you that I've got an invoice from this guy saying he's paid his tax, you check whether he has, and if he hasn't, clobber him. Don't deny me the benefit.
That's a perfectly good point. Let's then come to the last part of this interview. I want to talk to you about the effort the government is making to tackle the problem they face of declining growth, employment that is not rising sufficiently, investment that is not picking up. And the government has recently suggested a two-pronged strategy. One, a massive recapitalization of banks of something like 2.11 lakh crore over 2 years, side by side with a massive road building program of nearly 7 lakh crore to build 84,000 kilometers of roads in 5 years. First of all, is this the right response to the problem?
Well, I think both recapitalization and the road building are good things to do. The question always is in the detail, exactly how are we doing them. But there's no doubt that we do need a huge improvement in logistics. And I would say that it's railways and roads that we need to be working on. And so those are both things that require huge investment.
Let's come to these two one by one. I'll begin by asking you a couple of questions about the recapitalization of banks. It's a quantum of 2.11 lakh crore over 2 years. The Business Standard has recently published on its front page that the government intends to ask the RBI for a special dividend to part fund this 2.11 lakh crore. Now, given that this year anyway the annual dividend the RBI gives fell by more than 50%, falling from 65,000 crore last year to just about 30,000 crore, is it justified for the government to, on top of that, demand a special dividend?
Well, I haven't really gone into what the scope is for the RBI to give more of a dividend, so I don't know the answer to that question. I mean, there has been a view, which I think the economic survey at one stage had put out, that the RBI has much larger reserves than any central bank actually has. So the idea of giving a dividend was more like kind of shifting taking out from the reserves in the form of a dividend. It's not as if it would be out of their current profits.
Do you think that's a good idea, assuming the assumption is correct that they have more reserves than other
to be honest,
large banks?
I haven't actually thought about that sufficiently. But let me put it this way. You need to recapitalize the banks, and the whole business of RBI dividends, etc., is simply a way of trying to avoid making it look as if you increase the fiscal deficit. And the truth is, if you integrate the accounts of the RBI and the money and the government, that doesn't make any difference. I mean, that has the same effect. It simply means that it won't show up in the fiscal deficit.
You brought me, in fact, to this question about whether the recapitalization will affect the fiscal deficit or not. We now know, because the government has said so, that of the 2.11 lakh crore, 1.35 lakh crore will actually be government bonds. And the government has said that these bonds, and whether they affect the fiscal deficit or not, depends upon the character of the bonds. Others say that since they're going to add to government debt, it's a bit silly to claim it won't add to fiscal deficit. Admit it, because it's only an accountancy technique that will keep it out of the fiscal deficit. What's your feeling? Should it be accepted as part of the fiscal deficit, or should the government resort to accountancy to ensure it's not?
Well, this is a complicated question, but let me first, there's no question that it will increase the government's debt. Okay, what that means, whether it increases the fiscal deficit or not, that's the jugglery. There's a difference between our accounting system and what is called the IMF's accounting system.
A point that Arvind Surubhanyam also made.
Okay. Now, in our accounting system, it would clearly be part of the fiscal deficit. See, in the IMF's accounting system, it could be treated as a capital transaction. That is, you're, as it were, increasing the debt, but you're acquiring an asset. So it's sort of, if you borrow in order to say subsidize something, then you're not acquiring an asset. But if you do this borrowing in order to acquire a financial or asset in a profit-making organization, the IMF treats it below the line. But you know, that logic would require you not to treat disinvestment as above the line. So the real choice from the IMF's point of view, and I need to be, I mean, I'm just giving you my off-the-cuff sort of recollection. If you want to benefit from the IMF flexibility that would allow you to treat this as below the line, you must stop treating the proceeds of disinvestment as above the line. You can't do both.
Absolutely. That's a very good point you're making, that if you want to be logically consistent, you can't do both. Isn't there a second point? And I want to put it to you. Up till now, India has always followed its own traditional convention of accounting. Now suddenly, because of this recapitalization, if we were to follow the IMF's pattern of accounting and jettison our own, won't it look strange? And secondly, previous recapitalizations have actually added to the fiscal deficit. If now this one doesn't, won't that also look strange?
Well, by the way, this thing has been around for some time, in the sense that 3 years ago, towards the end of the UPA government, I had recommended that we should switch the accounting system and adopt IMF accounting. It's a pity that we didn't do it then, because if we had done it, then this would not have been a problem. But doing it then, it did involve giving up treating receipts from disinvestment as a revenue.
Now, if you do it, it may sort out your problem with recapitalization, but it will create a problem in terms of receipts from disinvestment.
I don't know how big the receipts are expected to be.
Well, this year the government is claiming, according to Friday's papers, that they will fulfill the target, which I think is roughly 74,000 crore.
But exactly. But I don't know how much of that is being subscribed to by government entities or not. That's the issue, really.
Let me come to something else. Mr. Jaitley has also said that the second step after recapitalization of banks will be what he calls far-reaching reforms to ensure that bank managements don't run up such NPAs again. Many people say that, in fact, those reforms should have preceded recapitalization rather than follow.
Well, you know, I wouldn't make too sequencing of reforms is always a good idea, but if they accompany it, that would be a pretty good thing. The idea of doing the reforms first and delaying the recapitalization, you can consider that. But to my mind, if you're really seriously doing the reforms, there's no reason to delay the recapitalization. The question that I'm not clear about is, what are these reforms?
That hasn't been spelled out.
Yeah. And I mean, there's a huge, professionally, There's huge differences.
And since the details of the reforms haven't been spelled out, we also don't know whether the reforms will be sufficient and whether they will work in ensuring that we don't build up these sort of NPAs again. That's still a question mark.
Yes, that's absolutely true.
Coming to the road building program, we're talking about building some 84,000 kilometers of roads over a 5-year period for a cost that is almost 7 lakh crore. Mr. Chidambaram has said in his Indian Express column that several steps have to be taken before road building can even start. And he's talking about things like preparing the DPR for each road, environment clearance, acquire land, bid out the project, tie up financing, fix the toll, and then actual road construction works. Which suggests to me, and he's put it pretty clearly himself, that nothing is likely to start in a meaningful way for at least another 18 months. So it won't have any impact on growth and employment for quite a while to come.
No, it's probably true. Look, increasing public investment is humongously difficult in the sense that, you know, the processes involved are such that a short-term impact via an increase in expenditure is almost difficult, very difficult to achieve. Because even on existing projects, you cannot suddenly speed up the rate of construction because you've got to mobilize.
So the benefits that will accrue to the economy from this road building program are not likely to happen in any significant way during the duration of this government.
Well, towards the latter half of, say, 2019.
But the latter half of 2019 is after the elections, because the elections happens in May.
Yeah, I'm not making a comment on whether it can be done before but you know, something can be done, but you know, these large numbers are 5 and 7 year programs. They're not programs for the next year.
Before I end the interview, there's one other subject I want to raise with you because it's been in the news, it's been discussed, and I'd like your opinion as a highly regarded economist, and that's the bullet train. Economists are divided over whether it's a good idea or whether it's a foolish one. Some say in a country where 30% live below the poverty line and where already there are major concerns about the safety of the existing railway network, this is a mistaken priority. Others say, given your target to grow at 8% and give your ambitions for the sort of country you want to be, it's a very wise futuristic investment. Where do you stand on this issue?
Well, there's no question, by the way, that the bullet train is going to be essentially an experiment between Mumbai and Ahmedabad. So that's not going to have a huge impact on growth. Railways, we need massive investment, and that has to be essentially non-bullet train type. The scope for doing something there is enormous because, quite frankly, we're running on tracks that should have been replaced a long time ago, and every railway minister that I'm aware of has actually said so. So the priority for railways has to be all these things.
Not the bullet train.
Well, these things are the real priority. I would say that the bullet train, you know, this was discussed during the last years of the UPA because the original decision to explore this was taken in the UPA government. You know, I was persuaded by the point that a large country like India needs some technology demonstrators. That is to say, if we start this bullet train thing now, it won't come into operation before 2025. And by 2025, the economy will be in a different position. So I don't object to the bullet train idea. You do need a technology demonstrator. The portion of the railways that handles that will become a very high-grade portion. And you have to start somewhere.
Two other quick questions, and I'll ask you for slightly shorter answers because we're somewhat running out of time on the bullet train. The Prime Minister has made a lot of the fact that we've got a loan from Japan of $13.5 billion, which is 88,000 crore for a 50-year period, repayable at a 0.1% interest. Critics have pointed out that given that the Tokyo interbank offer rate is 0.06%, and given that Japanese government bonds barely make a yield of 0.04, actually in Japanese terms, an interest rate of 0.1% is a pretty lucrative rate. So is the Prime Minister's description that this is virtually a free loan a mistaken or misleading one?
Well, Japanese, the interest rates that you're talking about are short-term interest rates. We don't know what the long-term interest rates were. So if you have a 50-year loan at 0.1%, I think you have to classify it as a relatively low interest rate. The real problem there is that we don't know what the exchange rate of the yen is going to be vis-a-vis the rupee.
Are you therefore worried about this second problem, which is that the rupee could depreciate against the yen in such a way that when you have to start repaying in 50 years, it may not be 88,000, it could be closer, as Bishwajit Bhattacharya has said for an article for The Wire, it could be closer to 300,000.
Well, the exchange rate risk is always a problem in all foreign borrowing and becomes more of a problem when you're doing a 50-year thing. But no, let me put it this way. I don't think it's the interest rate that matters. I mean, the key thing is, this is a very expensive project, the bullet train. It's probably going to be heavily subsidized because, you know, the costs of the bullet train are the same here as they are in Japan. In Japan, at their level of per capita income, they're willing to pay in order to save 2 or 3 hours.
Will people be willing to do that here?
Their income. You know, people will be willing to pay based on our income, and that'll be much less. So it is guaranteed to be a loss-making operation. Having said that, I still think that as a technology demonstrator, if you were to chart out a course for Indian Railways, it's not unreasonable to say, let's have one bullet train, knowing that it's going to be loss-making, because it'll start in 2025, probably, but it's only by 2035 that we'll really have worked out all the glitches. And, you know, by then, we need some part of our railways capable of handling this technology.
And what about the danger of the rupee depreciating against the yen? Do you minimize that?
That depends on how you manage the economy. I mean, you know, if you manage the economy well, look, over a long period, the rupee should actually, you could argue the rupee might be expected to appreciate. But if you don't manage the economy well, you could have a real problem.
My last question, given that India is sitting on reserves that are just about $400 billion, they were $400 billion a week ago, they've come slightly below that now, should India be paying for the bullet train itself rather than accepting a loan even at 0.1%?
No, definitely not. I mean, if you're going to do this kind of thing, it's a good idea to take a loan. I would not be. By the way, the reserves have nothing to do with paying. I mean, the reserves are not there in order to pay for projects. They're there in order to help manage the currency. And 400 billion is not, in my view, a comfortable level of reserves for an open economy which has a lot of foreign capital coming in. I mean, you have to allow for the possibility, if there's a short-term deterioration in expectations, quite a lot of money may go out.
A last question. How do you view the fact that in 3 years, India's ranking on the World Bank Ease of Doing Business has jumped from 142 to 100? Do you take this as a sign that the problems on the ground have been sorted out? Or do you believe this is an appearance and perhaps more cosmetic, that the reality may be different? Which of the two?
You need to go into which components, two things you have to look at. One is you need to go into which components of the index have actually shown an improvement, and I've not done that. Secondly, you have to check how much of this improvement is because others have deteriorated. You remember, this is not an absolute mark of how we are performing.
It's a ranking.
It's a ranking. So, and I don't know who are the 30 countries that we've now overtaken, and we don't know how much higher than us they were. So when you allow for all this, the real question you're asking is, how much have we improved? Now, my guess is that we must have improved a bit, and that's a good thing.
But on critical things like construction permits, we're still 181 out of 190. In terms of enforcing contracts, we're 164. In terms of starting a business, we're 156. In terms of registering property, 154. So there are real critical problems on the ground that still haven't been sorted out.
My own guess is that in this system of metrics, the fact that we've put in place GST would count very positively, even though we know that in the short run, it may be creating a problem. And there's nothing wrong with that. The GST long term is a good thing. So you could have such an improvement, and yet people say, well, I don't see the improvement on the ground.
It's possible for your ranking to improve, and even your score, and yet for people to complain that on the ground, I can't see it. That's not a contradiction.
Not a contradiction. But, you know, I wouldn't necessarily try to deny that there's been some improvement. For example, you know, the number of forms. I mean, I believe that the number of forms that exporters have to fill has been reduced. It could probably be reduced even further. So there must be some things. But, you know, most people...
will this have a major impact on FDI and foreign investors?
No, I don't think. I mean, look, FDI was coming in anyway. India... Over the years, I mean, it was not, when we opened up the economy, FDI was about $200 million. and it slowly began to build up. It's since then
So
we've
this is not going to lead to a spurt in FDI. It's not going to lead to a qualitative change in the way foreign investors view India as a destination.
Well, foreign investors view India in terms of the reality, and if the reality is improving and must be improving in some states, that would be reflected. I don't think any foreign investor decides something by asking, by the way, how are they doing on the index? I mean, this is really for breaking news, and this is a composite measure of everything. Okay. It is not an input into what a serious investor thinks about when they put money on the ground.
Montek Singh Ahluwalia, a pleasure talking to you.
Nice talking to you, Karan.